Now, it was the case before the crisis, but even more so now after the crisis, we're seeing it's the other way around. You know, 2/3 of global economic growth is coming from the emerging world, the Chinas, the Indias, Brazils, Indonesias, Nigeria, and so on, 1/3 from the advancing world. We are somewhat hobbled by the consequences of the crisis, the banking hangover, the fiscal hangover. They are much less affected. And emerging economies as a whole are growing much more rapidly than advanced economies. Now, you may think that's always been the case, but the breakaway in terms of growth rates taken as a whole for emerging economies only happened about 10 or 12 years ago. You know, the emerging world had its stars, its fast-growing areas, Asia in particular, but it also had extremely slow-growing areas like Latin America and Africa. Now, pretty much all the emerging world is firing on most of its cylinders, and the emerging world is leading global economic growth and will continue to do so for the foreseeable future. And in terms of, you know, the markets, what the markets think, if you took this chart, this is just the FTSE going back a couple of years, if you took it over slightly to the left there, to the low point that we had in March 2009, that was when the markets feared a second Great Depression. They feared that every bank in the world was going to have to be nationalized. It didn't happen, and you can see, you know, markets don't always tell a good economic story, but in this case, they tell a very good economic story, which is that you could see the strength of the stock market reflecting the improvement in the economic indicators and the improvement in company results that arose from that. So it's consistent with a pretty strong global economic recovery. Equities have been a good place to be, to bet on this global recovery continuing, and it has continued, and it is continuing. It's not, as I say, without its challenges. You know, all of you will know, we're familiar with the idea of the black swans, and you know, it's not a black swan to say that the oil price may go up. You know, as recently as summer of 2008, we had an oil price of $147 a barrel. But I don't think anybody predicted the kind of uprisings that we've seen in the Middle East and North Africa in recent months. You know, how, you know, one person setting fire to themselves in Tunisia can lead to events that spread throughout the region and push up the oil price. The oil price was going up anyway, but it's the most visible sign of quite a momentous political change there, which nobody really predicted. You can never really predict the timing of these terrible natural disasters of the sort that Japan has been suffering, the earthquake and tsunami, which will have consequences. I mean, my view on that, you know, Japan is still the third largest economy in the world. There will be a short-term hit to economic growth, followed, I suspect, by a powerful reconstruction boom. But we've already seen, you know, the consequences of an economy like Japan getting into difficulty. It's the center of so many supply chains and so on. These things do have an effect. In a globalized world, what happens in one part of that world does affect what happens elsewhere. But I think we can grow through that. I'm still very confident that this global recovery has enough momentum to cope with these challenges. And because it's led by the emerging world, which has a lot of catching up still to do, I'm pretty confident that this will continue. The other danger, of course, now I'm sure somebody will tell me if I'm wrong, but I believe these are the flags of Portugal, Spain, Belgium, and Italy. And as they say on the TV programs, in no particular order, you know. But Portugal, of course, is regarded as next in the queue for a Eurozone rescue. I suspect that will have to happen relatively soon as the political situation there sorts itself out a little bit. A big question about whether Spain has to go down the same route. I think the view today in the markets is that it probably won't have to do so. It may be different tomorrow. I mean, I think the danger would come if the crisis gets beyond these peripheral economies and into the core of the Eurozone. I don't think that's going to happen. There is a danger there, but I see this very much not as a new crisis in its own right. It's a problem for the Eurozone. It's partly a competitiveness problem for the peripheral economies. It's partly an aftershock of the banking crisis. I don't think it's a new financial crisis in its own right. It's an aftershock of the big one, which we had a couple of years ago. What about inflation? Is the price of fighting the recession, dealing with the crisis to allow more inflation back into the system? Well, I think it is, you know, there is more inflation. There's no doubt about that. And the normal thing that happens after a recession, recessions are normally very good at destroying inflation. That's normally what they're there for. Most recessions are deliberately created by policymakers to deal with an inflation problem. This one was different. So it's unusual to be talking about inflation quite so soon in the cycles, quite so soon in the recovery cycle. And one of the things that clearly that central banks have done in response to the crisis was reduce interest rates to these exceptionally low levels. In the case of the Bank of England, more than 300 years of existence, bank rate had never been below 2% before, 0.5%, established in March 2009, still with us. The ECB, similarly, a much shorter history, but very low interest rates. I think the ECB will raise rates tomorrow and begin the process, the slow process, the very slow process of normalizing interest rates. I think the Bank of England will follow, at some, within weeks or months of the ECB. The Fed in America will be pretty slow to raise, but this easy monetary policy has been the tool that central banks have used. And one of the consequences of that has been to allow a little bit more inflation into the system. I mean, I asked Mervyn King, would policy have been any different had you known that we'd have the kind of inflation outcome that we've got at the moment? And as you know, inflation is more than double the official target. And he said, no, we'd have done exactly the same thing. So, they have, deliberately or not, allowed a little bit more inflation into the system. Commodities, again, this is an index from the Reserve Bank of Australia, which measures it in a slightly different way. But you can see, after really nothing much happened to commodities over years and years, the beginnings of what some people call the super cycle, just a few years ago, 7 or 8 years ago, and that the crisis was only an interruption in what appears to be an upward trend for commodity prices. And one of the reasons for that, I think, is the nature of the global recovery. If you've got a global recovery which is led by emerging markets emerging economies are more commodity hungry, more energy hungry, you're going to have this response in commodity prices, which feeds back then to advanced economies. And if we look at, this is another aspect of those purchasing managers surveys, and it just shows that globally there is inflationary pressure, both in terms of input prices, those commodities, but also in firms passing on those higher costs in terms of their own prices. So we do have more inflation. I don't think it's runaway inflation. I don't think it's 1970s-style inflation, but it's more inflation than we were used to in the period which is sometimes known as the Great Moderation or the Great Stability. So just to sum up, before handing over to Neil, the global economy is recovering, and it's recovering strongly. It's been doing that for a couple of years. Although, as I say, you don't always get that impression. But the markets, I think, have recognized that story. In the advanced countries, we've got the hangovers from in the public finances and in the banking system, which means that our recoveries are going to be slower. So you've got this fundamental shift in favor of emerging economies, which will continue. Inflation is a concern. It's not a concern, as I say, on the scale that we had in the past, but we should be expecting somewhat higher inflation than we've been accustomed to over the period of great stability that led up to the crisis.